Okay, so as you know, in my videos, the bottom line always comes first before any analysis because I respect your time. I know you got shit to do. So here it is. The reason I'm so obsessed about Palantir as my top stock pick is because it has four things I can't find anywhere else: high growth, high profitability, sticky clients, great cash flow, and no debt. I guess it's five. Well, basically, it's a company that grows at a high rate, highly profitable. The clients actually stay, they don't leave, and its balance sheet is clean and it's generating cash flow. It doesn't need to borrow money. It's a very attractive play, in my opinion. In this video, I'll give you the numbers, but I'll also show you where there are major risks that may turn this thing into a piece of turd. Any company, any stock has that risk. There's no perfect spouses, except my wife, and there's no perfect stocks in this God-given universe. And you got to understand the risks if you're considering getting into Palantir. So let's do this. "41% growth? Check. 1.5 billion in revenue? Check. 424 million in free cash flow? Check. No debt. I don't know how to do the four. No debt? Check. Let's talk about net retention of 131%. That means the clients are staying. Check. Now, just to kind of throw you a little bit of more numbers, they closed over 60 deals in the past year worth over $1 million each. 20 of those were worth over $10 million each. It means it's a high ticket item for a company with no debt, high margins, good cash flow, sticky clients, and exceptional growth. That's not something that's easy to find in the stock market, especially at this price. Now, as you know, Palantir is comprised out of the commercial side and the government side. On the commercial side, they have Foundry. On the government side, they have Gotham. And last year, the growth numbers were really impressive. However, I'm not going to dig into the numbers too much because the problem was that there were no rest of the world growth on the commercial side, and there was a slowdown on the government side. And the main thing I want you to understand about Palantir is that despite its division between the Gotham and the Foundry businesses, one government and one commercial, both of them will unfortunately benefit from this new geopolitical status. Now, if you look at their financials, you'll see that the growth was mainly fueled by US. They're really strong in the US, and their presence in rest of the world markets, it's almost non-existent. It's very weak. And that is because in Europe, companies as well as governmental agencies really didn't like working with what they define as a US government spying software. It just morally didn't fit their values. But unfortunately, in the past month, things have shifted. Geopolitically, things have gotten much, much worse. It's almost where the European community now understands that there are worse things than Palantir in this world, and they need Palantir to deal with the Russian threat, both on the commercial side and on the government side. So we're going to see a lot of action, a lot of business, both on Foundry and Gotham from the EU, which was the Achilles heel of Palantir so far. And of course, Palantir is not immune to risks. They're massive potential risks for Palantir, but they don't come from the EU or their inability to integrate into these EU companies and governments. Their major risk is coming from a whole different ballgame. It's coming from within, from the US. And Palantir has been operating almost single-handedly, creating this universe in which it kind of became the monopoly. They created the industry and they're dominating it. Well, we haven't really seen any major plays from a company like Microsoft, from a company like Google, and a whole bunch of different companies basically pushing into this industry and trying to get a piece of the pie. When that happens, Palantir is going to have to fight back. And if they don't do it correctly, we're going to see a bloodbath. That's straight up. I'm going to tell you right now, the biggest risk of Palantir is companies like Microsoft, Google, Amazon, whoever, maybe even Oracle, I don't know, stepping in and trying to take a piece of their business because of how lucrative it is, because they're seeing the margins that we're seeing as well. So the question is, how is Palantir dealing with it? Well, they partnered with Amazon, they partnered with IBM. Now we know they partnered with Google. You can see the latest LinkedIn profile of this Google executive. I can put it on screen for you guys to see that they are working with Foundry right now. So they're partnering with these companies because they're basically trying to show them, hey, it's cheaper to work with us rather than compete with us. Join us. If you can't beat them, join them. Now, another piece of it is actually giving away a lot of stock-based compensation to attract the best talent and lock them in for 4 or 5 years in the company to prevent these companies from poaching talent, because talent is the key to this. If you actually lose your top talent to Microsoft, Apple, Amazon, Google, you're basically screwed. So they're trying to do all the right things. They're creating a developer community around Palantir's products, and they actually got CodeStrap, my friend, and I actually interviewed him on this channel to head the developer community online and develop awareness to this, so the sales process is going to be easier for the company. Also, they didn't even have salespeople, not really, up until like a year ago. So they're setting up a whole sales department. It's almost like they're getting rid of this whole mantra of we're strictly engineers, we're not going to do any sales, which is a good thing. It's healthy for a company to have sales. I mean, the product can sell itself for sure, but it's always good to have salespeople behind it. Now, the main thing I want to explain in this video is I think Palantir is long-term immune to any recession. Now, everybody thinks that the US is headed to a recession because the numbers don't lie. Nobody knows exactly when, but if you look at the inversion of the yield curve, which is impending, if you look at inflation, the geopolitical issues, commodities crisis, everything is pointing out that things are about to get worse before they get better. Nobody knows exactly when, maybe next year, maybe never. But if the US goes into recessionary mode, a company like Palantir will initially dip because it dips with the market. It's extremely correlated to the NASDAQ, and you can see it moves in concert with the NASDAQ. However, long term, this is a company that's built for crisis, for chaos, for saving money in uncertainty. And while it will fall with the entire market if it actually crashes, it will be one of the first to rise up because of its setup. It's built for chaos, uncertainty, and problematic environments of unknown parameters. This company, I think, in my opinion, justifies 40% of my capital, but you should do your own research because I'm not a financial expert. I'm not a financial advisor. You do your own research, find that for yourself. Talk to a professional, and if you want to allocate some capital to Palantir, welcome aboard. And if not, that's good as well, because every investment is risky and you may lose your money. It's something you have to understand. Palantir isn't a perfect immune stock that can never go down. And as always, if you want to interact with me and talk with me, head on to TipRanks TV. I'm going to be replying to your comments right there. Make sure you click on this video. The link is going to be below, and I'll see you on TipRanks TV.